And then lastly, underlying fundamentals, which I think are the number one thing that we're concerned about right now relative to how the market is going to perform moving forward. What's going to happen with rents? As Victor showed in his slide of the amount of new construction that's going on in the residential market, there is tremendous supply that's being added. And on a relative basis, it's not that bad. If you look at the average city in the US, they are replenishing their stock of housing at the rate of about 5 to 7% of the total stock. Right? We have 3.3 million dwelling units in New York City. If you were replacing 5% of that or 7% of that, that would be multiples and multiples of what our new construction totals are relative to what is actually being built. So I don't think we have a supply problem in terms of being way overbuilt, but there is a lot of new supply that's coming to the market. And interestingly, a dynamic that's happened in this cycle that hasn't happened in the past is that a lot of the new construction, and especially the condo construction, is being implemented in a way different than we had seen in the past. New York historically has always been an owner-occupied marketplace. When you look at housing and ownership of housing, New York City has always been a market in which 93% of our housing was owner-occupied. In this wave of condo construction, condo sales, about 40% of the apartments have been purchased by investors. So essentially, 40% of all the condos that have been built are rental units. That is exerting tremendous downward pressure on rent levels. So rents in the residential sector, particularly at the high end of the market, are falling. We've seen over the past month or two, more reports are coming out now about the retail market and how retail rents are dropping. And it was interesting, we had a meeting of the heads of our different departments a couple of months ago at CNW, and I was talking to the retail folks, and they were talking about all the vacant stores that we're seeing around town. And being a sales broker, to me, I said, oh, that's an easy problem to fix. Just drop the rents, you'll rent all the stores, it won't be a problem, because if we can't sell a building, it's because the price is too high. If we priced it at the right level, there's 100 people who would buy the building. So to me, it's all price sensitivity, and that's the thing that would make it happen. So I said to our retail folks, well, so the landlords are just asking too much in rent, right? If they drop the rents, everything will be fine. And they said, no, actually, you know what? There are not a lot of new tenants that are coming into the market, and a lot of existing tenants are looking to reduce their floor plates, reduce their footprint within the city. So that's a concern, and we've seen over the last month or two that there have been a lot of articles written and a lot of folks talking about the downward pressure that is occurring in the retail space. So we have retail rents that are starting to fall. In the office sector, our office leasing guys are saying that, you know, probably within the next 12 months we're going to see some significant downward pressure exerted on office rents. And that, again, that was 2 months ago. What we've seen since then is in talking to owners of office buildings, they're telling us that concession packages are going up. Free rent packages are going up, tenant improvement work letters are increasing, and that's usually the first sign you see before rents start to fall. So we have tremendous downward pressure on these fundamentals. The only way you could keep value flat if fundamentals are degrading is to have interest rates drop and have cap rates drop. Well, interest rates probably can't drop any further, so we're not going to make up for that degradation in underlying fundamentals and rents by having cap rates compress any further. So that would indicate that we're going to have a reduction in value. So, and that's consistent with the fact that we believe we're in this correction mode or transition mode within the marketplace. But for the last 2 or 3 weeks, and I'm glad I wrote this before the election because I didn't want the statement to be an indication of my political views or anything, but I have felt more optimistic in the last 2 or 3 weeks than I have in a while. And maybe it's just because a lot of the properties that we're handling that have been languishing for a while, we have good activity on, we've sent contracts out, we've signed contracts. It seems like things are moving a little better. But if we do have a correction, we don't anticipate that the correction is going to be very significant. The reason for that is that we have not had a catalytic event to make the market correct. There hasn't been a stock market crash. There hasn't been a credit crisis. There hasn't been a housing bubble. So there hasn't been anything to make this happen. This is just the natural cyclicality of the market. Nobody ever said that markets weren't cyclical. They are always cyclical, and perhaps the low interest rates that we've had for such a long period of time have created an asset bubble. And Victor, as you said, we won't know until afterwards. But the fact is, history and economics both show us that long periods of low interest rates create asset bubbles. And you could make the argument that we got into the housing mess the way we did because Greenspan kept rates too low for too long, which created a housing bubble. So have we had the same thing in the commercial real estate market? That's yet to be seen, and again, we won't know until after we're through the bubble. But the fact is, because there hasn't been a catalytic event, we believe that if there is a reduction in value, that reduction in value will be relatively mild. The market's taking a deep breath, and again, within the last 2 or 3 weeks, I'd say that we're probably more optimistic than we've been in a while. And if this is a typical cycle and we are 13 or 14 months into it, perhaps it lasts another year or two, but we're hoping and believe that if there is a reduction in value, that reduction in value won't be very, very significant.